So trading, why does everybody gravitate towards trading? Well, the common consensus is trading makes you quick money. It's the shortcut to making fast money. And that is true sometimes. If you get lucky in certain time periods, it can work for you. The problem is that you start to think that you are different than everybody else. You're smarter than everybody else. And that's usually what leads you down the path of one loss after another. Look at this chart. It's actually showing you human behavior or human emotion. You're like, what the hell does that even mean? I thought it was the price that it's showing me here. It is showing you the price, but it's based off of what human beings are doing with that asset. So when you see an asset, in this case, Bitcoin, is trending downwards like this, just plummeting down, that means there's a lot of fear in the market and people are selling heavy. Okay, so while you can look at it at a chart, in the moment, a lot of these things don't make much sense because they're happening instantly. And so a lot of times the chart reading that you're doing is actually, you're looking, it's a lagging indicator. You're looking at a pattern that's already been developed. And when you get to it, maybe that pattern's gone. All right. But really it's about human emotion. So you can see when general consensus is we love Bitcoin, right? You'll see this pop come up right like this. Okay. But then you'll see, hey, we're not really big fans of this market. We need to get out. All right. And then as it goes down, we really need to get out. And then now we're having a nice little resurgence coming through here again. So really a chart shows you human emotion, human behavior. And if you can gauge that behavior, you can make some money. Now, most people think that, well, I need to, get in at the very bottom and get out at the very top. That is a losing game. You might hit it a couple of times, maybe once, maybe 3 or 4 times, but the vast majority of times you lose out trying to time that top and bottom. The most money that people are making is actually in the middle, as you're taking profits off the top as it goes up, and then you are reducing your position size and getting out as it goes down. The whole point here is obviously to make gains, but like I said, limit your losses. Okay, so Bybit, what do we do here is that you can pick an asset that you want to trade. So when it says BTC to USDT in this case, is that we are trading the price of Bitcoin, but in the currency of USDT. So this is called a USDT perpetual contract. There are contracts here that you can even see that are called inverse contracts. All right, so that's actually like if you do the Bitcoin inverse perpetual, that means that you're putting in Bitcoin to trade and you're actually either losing or gaining actual Bitcoin. In this case, we are trading Bitcoin, the price of Bitcoin, but we're not actually putting in any Bitcoin. We're using USDT as that currency to trade the price of Bitcoin. Sometimes that gets a little confusing, but the safest way, even though crypto is volatile across the board, is to actually do USDT. So BTC, USDT, the perpetual contracts are better because you'll only lose in USDT. Whereas, like I said, if you do Bitcoin and inverse perpetuals, which is what I started with, which is what I used to do, yeah, the gains are great because you get Bitcoin, but the losses hurt even more because you're losing Bitcoin in this case. So my opinion is when you're starting out, try and stick to the BTC USDT or any asset USDT and perpetual contract. That's really going to help you out. All right, so a lot of flashing things going on here. We're not going to get too deep in this, but what can you do here is that you can actually set orders. So if you look on the chart here, I can say, at this price, I want to put in an actual trade. And then what happens is you can say, this price doesn't work. Let's say Bitcoin is 22. I'm only going to buy when Bitcoin hits 22,000. All right. So you fill in your price and you're going to put in your amount. Now and then what you can do is it's going to tell you in USD what the value is. And you can say you can go long on it. All right. There is a short here. And if you're not familiar with shorting just means that you are banking on the market going down. And when it says open long means you're banking on the market to go up. Very simple. Okay, so if you think right now we're sitting at just over 23,000. I think it's going to go down to 20 or 17. Then shorting could work for you. Okay. But this market, it's very, very hard on people. It's very volatile. And shorting can really nip you in the bud, because if this moves up to 25, 27, 30,000 quickly, even if it spikes up there, you get what's called liquidated. So when you set a price or you set a trade, and I'm going to show you exactly one of my trades, whatever price you lock in, it's going to tell you that at a certain price, if it hits this, it is going to eliminate your trade. So if you're doing a long and right now it's at 23 and you say, hey, look, I think it's only going to go up. It can't go down. Well, it can say that, okay, put in your long position, but if it hits to 15,000, 16,000, then that your trade gets eliminated altogether. And the flip side is if you want to do a short, you can say, I think this market's going to go to 18,000, or I think it's going to go to 21,000. And there may be a price point that says, hey, look, if the market goes to 24,000, you're going to get eliminated from your position. So things to be careful for. Again, I'm going to show you in my actual trade. All right. But how do you make money from this? There's a bunch of exchanges out there. I'm only showing you Bybit here. But what is the point? The point is that you have to set parameters before you actually create this order that I kind of roughly showed you here on this right hand side. What do I mean by that? Some of the platforms will actually enable you to automatically put it in or preset your trade. So you can say, look, if this thing drops by 5%, meaning it's 22,000, my price of 23,000. If it drops 5%, I want out of my position, or I want out 50% of my position. You can set that in. You can also say that, hey, every single time the price jumps 10% or I make a profit of 10%, I want to remove some off the board. Or you could say when it moves 25% off, remove 10% off the board. You can preset these parameters in here as well. All right. And that is a key. I want to really highlight that though. Even if you do it mentally, because Bybit doesn't allow you, or at least last time I checked, it didn't anyway, is that you have to have orders in mind. Unless you're just going to be like, I'm going to let it ride. I don't think it's going to drop ever again. You can let it ride. But by and large, you want to make sure you preserve your capital and you have preset prices in mind of when you're going to get in, when you're going to get out, even if it is like a stair-step process. Every 25% it goes up, I'm going to remove 10%, and then the remaining 10% we'll just kind of leave and see where it goes. A lot of people do that. But the goal here is that if you've got $1,000, you want to make sure that you're not losing, I would say 3 to 5% of the entire portfolio with one particular trade. So you got to limit your losses. There's all kind of patterns in play. There's all kind of other indicators, in terms of volume. You want to look at how much, like if a price is moving around quite a bit, but the volume is low, whatever you're looking at is not dependable, just because the volume's not there to support it. So it could still go either way. If you've got heavy volume, if you look here, this major selling volume over here, that's a good indication of this is solid. This is a solid pattern or trend, and we need to be aware of it. All right, but let's look at my actual trade here. So I told you I'm not a trader. This is not what I do. You can do like hourly trades. You can even do weekly, you can do trading based on certain time frames. So 15 minutes, 30 minutes, 1 hour, whatever the case may be. For myself, I am a perma bull. I think the market's always going to go up in the long run. And so I play the long game here. What I did was, here's a very unsophisticated way of trading, is you monitor the market for a very long time and get a feel for the price point of the particular asset. So you can monitor something for 6 months, 3 months, 9 months. For example, Bitcoin, and just watch what cycle are we in, learn it, and really see what's happening and kind of get a feel for price points. Now, it's not going to help you in a shorter time frame by any means. But when Bitcoin dropped to 17,000, I looked at, well, if I put in an order price here or an order here, that, there's a pretty good chance that I don't have to worry about it I don't have to worry about, in my mind, that this is going to go under 13, 14,000. I know people were calling for that, but I wasn't worried about that. So when you see here liquidation price, and if you hover over these, it'll tell you exactly what it is. Liquidation price, that's what I was referring to before, that there is a specific price that if it hits this, it will wipe your trade out entirely. And that's why having those preset orders and our preset parameters that will remove you from the position before you hit this liquidation price will help you out. I've been burnt by this many times. But in this case, when I first started this, I think I was sitting around $12,000 per Bitcoin was my liquidation price. I was fairly confident that it wasn't going to hit that. And if it did, you have to be okay with the consequences. That's another thing, right? Can't blame anybody else. It just is what it is. So that was where I was at. I was like, hey, if it hits 12,000, my bad, but I don't think it's going to go there. So how come if I said it started at 12,000, are we sitting at 14,000? Well, there's one more tidbit here, and that's leveraged. So if you guys look here, top right, okay, you can see isolated, and I'll say, you know, a green 5x or a 1x or whatever it is. This is the leverage. And the difference between cross and isolated is cross margin here is actually, it'll range over all of your trades or multiple trades. Okay. Isolated means just for this one particular position, this will be my leverage that I use for it. Now, most people, including myself, will tell you don't play with leverage or high leverage when you're starting out, for sure. People are playing with 20x, 30x leverage. When I first did this, I believe I was at a 3x leverage. So my liquidation price was about a 12x. And I initially started because I didn't know where the market was going with a 1x leverage, basically no leverage. And I think I was sitting at around 11,000, somewhere in there. And so I've kind of moved the leverage a little bit higher as I've been a little bit more comfortable with the price point, and it's gone a little bit further. So that's why the bump's been there in terms of liquidation price. If I move this to a 10x, my liquidation price would go higher. If I did 25x, higher. And so you're playing a more risky game, okay? And so I just want to show you this here. So BTC, USDT, my quantity is 0.03 Bitcoin. And the value right now is sitting at about just under $530. My entry price was $17,005. And the price that it's at right now is just over $23,000. As I mentioned, the liquidation price is $14,000. And the margin, so basically what I put into this position was $105. But because I'm at a 5x leverage, the value of the contract itself is just under 530. So my unrealized profit sitting here that I haven't taken out is $163, which is about 155%. I took $50 off the board when we had this uncertainty about what the DOJ was going to announce and all that kind of stuff, would end up going after, you know, the well-known and heavily popular Bits Lotto. So I wasn't sure what they're going to announce, so I kind of took some off the board and left the remaining there. So again, not a big trade, but I did take $50 off the table. I have $163 sitting there in terms of unrealized profit, and we kind of ride it out. So this is 100% a way to make money. It is usually the first touch point people have with crypto is coming in through from a trading perspective, because they heard so-and-so has made $1 million or 500,000 or 200,000, whatever it is. We don't know how much they've lost in the process. But this is a way. It's not a way that I would condone if you want to be in this for the long term. But some people love it, and if you can manage your risk and manage your emotions, it's definitely a good way to make some money.